Now let me go back to where we left, right? What did we do last? Where did we stop last? Any idea as to where we stopped last? Guys, what did we do last? Ethics, right? Okay, we planned to start ethics, but we couldn't start ethics, right? Okay, so let me start off with ethics. I'm going to give you a little introduction, background to ethics, and then we are going to start off with a question, and then we will try to work on substantive procedures. Clear, everyone? Brilliant. Right. First and foremost, okay, will ethics be tested? Ethics can be tested. Okay. You probably can be tested with ethics. I'm going to quickly take you through what ethics means and how it can be tested, and then we'll directly look at a past paper question. Okay. Super. Okay. Guys, ethics can be tested in section B. Okay, you can get questions in section B. There have been instances where your examiner has tested ethics previously for about 10 marks in section B. You can get it, but is it a frequent visitor? Well, not a frequent visitor, but once in every 2 exam sessions it can come. But anyway, we will be ready for an ethics question, right? Okay, so ethics simply means doing the right thing. As an auditor, you will go through certain dilemmas. You'll go through certain dilemmas. It's about how you combat, how you fight these dilemmas, right? So as a part of ethics, what you need to know is fundamental ethical behavior. Now, as accountants, we've got certain behaviors that we need to adhere to. We need to be adapting ourselves to, right? We will come across so many issues as an accountant. So many issues, but whatever the issues it can be, we need to make sure that we find a solution to it, because in the past, as you know, there have been so many instances where our profession has been questioned. So what are our fundamental principles that we have to adhere to? That's our PICO. In PICO, I stands for integrity, C stands for confidentiality, C stands for competence, O objectivity, and P professional behavior. Well, integrity, obviously I'm going to quickly take you through all this, right? Integrity means you have to be straightforward in all business relationship, and you need to make sure that you're honest, straightforward and being honest. That is what integrity is about. So integrity, straightforward and honest. Second, you have clients' confidential information. You got to make sure that they are kept safe. You don't use it for your personal benefit. You have been trusted with confidential information, so you got to always make sure you safeguard it. So confidentiality means confidentiality refers to how you can safeguard, how you should not disclose information of clients to other people. So confidentiality is about safeguarding clients' information. Number 3, competence. Competence is where you continuously upgrade yourself, update and upgrade yourself. meaning you read the relevant laws, regulations, go to technical articles, take Kaplan new books, updated books, you take everything and you keep yourself updated with whatever is happening across the world. Objectivity means being independent. You don't take sides. You are independent. You don't take sides. You give a very unbiased opinion. So, independent. Professional behavior is obviously maintaining. The moment you maintain all this, you professionally, your behavior is enhanced. So you got to make sure that your profession ACCA is always upheld and you are within the rules and regulations set by the qualification. So act within the professional requirements. Are we clear, guys? Actually, that's a bit more. Actually, in fact, it's you can obviously take the technical articles, or I'll share some articles with you. There's a bit more that you need to know in that, but this is just a quick revision that I'm doing, so that will help me answer past paper exams. So please make sure that you go refer to this in depth, maybe the textbook or study hub or MyTube, wherever. Make sure that you get enough knowledge about this. Okay, so this is my fundamental behavior. When I'm trying to fundamentally act in this behavior, when I'm trying to fundamentally act in this behavior, when I'm trying to fundamentally act in this behavior, there can be threats that can come. Now, when I'm trying to act like this, there can be some threats, issues that I can face. Now, these issues are going to be common, which you have already studied, but in the exam, it's going to be more of a role play issue where you're going to see you have been put into a situation. You're going to face a situation and you're going to see how to come out of this situation ethically, right? So what are the threats that you can come across? Number one, your first threat would be self interest threat. Okay, self-interest threat means this occurs when you think about yourself, when you're interested in yourself within a client. This particular interest probably will lead you giving the wrong opinion. For example, you have shares within the company. For example, you've been influenced, you've been given some money, interest, you've got something to do with the client. So all this is significantly affecting your relationship in terms of providing the audit opinion. So your family members having shares, accepting gifts, you have one client with you, you're too reliant on this one client, or there is overdue fees from the client, you have to receive money from the client. So all this could probably make sure that you're reliant, you're more reliant on the client, and you don't have a choice, but you'll be influenced. That is self-interested. Second threat will be your self-review threat. A self-review threat occurs, guys. A self-review threat occurs when you're the auditor. You probably prepare the financial statements and you are auditing the financial statements. You prepare the financial statements and you're auditing the financial statements. Meaning, probably you're going to the examination hall. You're sitting you're writing the audit paper and you're correcting your audit paper. Chances of you passing will be very high because you will not be able to discover your own faults. So a self-review threat occurs when the auditor reviews their own set of creation. Whatever they have created, they are reviewing it. That is a self-review threat. Are we clear? Are we clear? So auditor preparing their own set of financial statements, auditor preparing doing tax work for the client, auditor is doing the internal audit and probably using that for external audit. All this can result in a self-review threat. Okay. Number 3, advocacy threat. An advocacy threat occurs when you're trying to take up a management role in a client, when you're trying to place yourself as an advocate of the client, you try to promote shares of the client, you try to bargain in behalf of the client, you try to recruit, do interviews on behalf of the client, you're trying to take up a management position. An auditor cannot take up a management position. An auditor has to be independent. Advocacy is when you are promoting or representing an audit client. So that is advocacy threat. Number 4, familiarity threat. Familiarity threat means, guys, your relationship with the audit client is very good. You can be influenced. You believe, okay, this guy will not make mistake. This guy is a honest guy, because of the relationship. It is built more on relationship rather than the work that we are doing for the client. And lastly, intimidation threat. Intimidation threat occurs when you have been by the client, you've been pressured, you've been intimidated, you've been pressed, forced to give some opinion. It can be due to overdue fees, it can be due to pressure, can be due to some sort of an undue influence. There is an influence for you to undertake certain unethical action. So guys, as an auditor, there are certain things that you have to adhere to, but you can't adhere because of these issues. So we need to find solutions for these 5 issues. That's where we are going to come up with safeguards. That's where we are going to come up with safeguards. Guys, safeguards means how you are going to protect yourself. Safeguards means how you're going to protect yourself from these issues. Okay, what are the safeguards available? Safeguards may change from situations to situations. So we've been given guidelines, right? Safeguards by the profession. By the profession, there are certain things that you can undertake. Like what? You have to be trained. Education has to be very, it has to be mandatory. You have to maintain disciplinary action. If you find an auditor being threatened, or if the auditor is doing something unethical, you, from the profession, there is disciplinary action. You have to remove the person from the profession. Probably this person can be fined, can be put behind bars. Well, another thing that you have to do is you have to make sure that you continuously your staffs are trained. So from the profession, that's where we have Kaplan books which are being updated every year, or maybe study hub is being updated every year. So enough training, education, disciplinary actions, all this comes from the profession. But profession also says you have to rotate the audit partners. You can't have audit partners more than 5 to 7 years to reduce the familiarity threat. So that is a specific safeguard. So in the exam, if your examiner says the audit partner has been there for a very long time, you say no, audit partner has to be rotated between 5 to 7 years. You have to rotate your fees income from one client. So there are certain guidelines given by the profession, right? Number 1, you can talk about audit partner rotation. Number 2, you can talk about fee income restricted to 15% from a client. Actually, from a client, from your total gross income, you can't take more than 15%. If you take more than 15%, what basically happens is you are more reliant on the client. So you got to make sure that your fee income is restricted to not more than 15%. There's something called contingent fee. Contingent fee is prohibited. What is contingent fee? Guys, contingent fee means audit fees based on profits, audit fees based on revenue, audit fees based on total assets. Audit fees cannot be based on revenue, profits, or any of the elements in the financial statements. Audit fees can only be based on the risks, the work that we are going to take, the experts who are going to come in, the partners who are going to undertake the audit. So all these factors has to be captured. So contingent fee is prohibited. It's not allowed, illegal. You understand my point? So number 4, by the profession. You've got safeguard as restricting personal relationship. So if you have personal relationship, you have to restrict personal relationship and to make sure that it does not affect the quality of the audit. Are we clear? Are we clear? Guys, I'm going a bit more faster because I want to give a little background to this, right? But are we clear? Are you following up with me? Are you following up with me, everyone? Okay. So, right, brilliant. So from the profession, we've got guidelines. Next, from the workplace. So the workplace has to be solid. Workplace has to make sure that one thing in terms of recruitment, when you are recruiting, you need to be careful. Now, for example, if you are going to recruit an audit manager, you need to see that this particular manager in terms of ALIS does not have any personal relationship. So recruitment is very important. From the workplace, there has to be strong internal control system. Your internal control has to be very strong. You got to build a strong ethical environment, that is very important within the company. So strong ethical environment is very important. You got to also make sure that you have a proper decent organization structure. Organization structure is also very crucial. So next point is organizational structure. You have a proper organization structure, hierarchy, you know who has to report to whom. So basically we have a very strong internal control system. Now under this, certain things that I want you to keep in mind is from the workplace, specifically, can you use tools, can an audit firm prepare financial statements and also audit the company? Yes, you can, provided you have two separate teams. So if you're going to provide more than one service to your client, you got to make sure you have two separate teams, team A, team B. So below this, using separate teams when additional services are provided. Guys, your client can give you gifts. Expensive gifts are not allowed. Immaterial gifts are allowed. So you can accept gifts. Accept immaterial gifts. Now, if it's material, you can't accept. Are we clear? Material gifts cannot be accepted. Very importantly. Okay. Next point. If anyone has individual family members ties within the audit, now probably okay, you're an audit manager, your mother-in-law is working in this particular company where you're going to audit, you should not accept the audit. Don't accept the audit if there is some sort of a relationship. So not accepting, not allowing individuals with family ties to audit. Now obviously you have to see to bring in another person. So guys, this is from the workplace. From as an individual, you have to make sure that you maintain safeguards. What do? You always comply with the guidelines. You go back to the profession, use a mentor, keep in touch with professional bodies like probably ACCA, SEMA, CFA, CS Sri Lanka. You can always keep in touch with them. You can understand, okay, what are the relevant laws and regulations which are being updated, and continuously upgrading and updating yourself, guys. That's the most important thing. You got to make sure that you upgrade yourself. You bring in, you try to understand what are the new set of rules, regulations that is coming in the profession. You need to make sure that you For example, if there is any quality issues, have individual partners do a hot review, do a cold review, a quality review. A quality audit is where, a quality engagement, quality control reviewer, someone who has reviewed, who has done the audit, is reviewed by another partner to make sure that you are very ethical, because ethics is the fundamental of our entire profession, right? If we can't maintain ethics, then there is a big problem. We got to make sure that entirely ethics is served. Finally, guys, do this, if you can't do this, if you can't do this, and if you can't do this, if you still feel that you are unable to maintain ethics, if you are not in line with the ethical requirements, then what happens is you resign from the audit. You don't continue with that audit, because you're not ethical enough. You're not ethical enough with your opinion. So if you come across all this, and if you still cannot mitigate, safeguard yourself, then you resign. You politely decline. Are we clear? Are we clear? Are we clear? Okay. I'm giving you a quick 3 to 4 minutes to quickly go through this, refresh, take notes if you want, and then we are looking at a past paper question. Once you're done, give me a dance. Just quickly go through. Okay, quickly now, students who have done a skills level paper before, students who have already done a skills level paper before, give me an A, at least one paper, and tell me what is the paper that you've done with your score, please. Your paper with your score, please. If you've done multiple papers, send me your multiple papers result. Okay, Inshifa noted. I got Inshifa's others. Abdullah, Afzal, Ashfaq, Mino, Nabil, Priyanka, Saifullah. Brilliant. Thank you, Priyanka. Saifullah, Terza. Thanks, Ashfaq. Okay, Abdullah, understood. Saifullah. Saifullah, so this is your last paper. Oh, Terza, you've done so many papers. Brilliant. Okay. Last time. Okay. Now the reason why I'm asking you is with this session, we also have the audit revision game plan videos. Okay, what is this revision game plan? Revision game, don't worry, revision game plan videos. In this particular set of videos, we have our lecturers, including me, doing real ACCA papers on the platform in the real exam timing. So if you are our student, if you are our student, probably I know Inshifa is our student. Inshifa, you would have followed my FR. I did it under FR in real ACC exams. I did questions and I did the answers like that. We have for audit also. Did you get it, Inshifa? There you go. Inshifa has got it. You got it. Okay. If you are not PPIM student, I'm trying to talk to the management and give you access, right? I want to know students who are not PPIMs. Students who are not PPIM, just give me maybe a hi so that I know you are not PPIM students, so I can try and okay 1 2. I'm trying to get you access. I'm trying to get it freely. Don't worry. Don't worry. I'm trying to get it freely. Okay. Oh, quite majority is not PPIM students. Okay, that's nice. 1 2 3 4 5. Okay. Fine. If you're not PPM students, I'm trying to see if I can get you, right? I will come back to you by today, tomorrow, where all the recordings in the real ACCA platform, all the questions, because the moment you see that audit is a repetitive paper, when I say repetitive paper, guys, what I'm trying to say is most of the areas you see it's repeated. If you do our 5 to 6 papers, it is going to help you. So that's what I'm trying to see if I can help you with it. Let me try. Okay. But before that, I done. Can we look at another? Can we look at a question if you're done? Everyone. So I'm going to quickly take a picture of your this thing because I am going to send your names to my team. Probably they'll get in touch with you to give you the materials, right? Ashfaq, where did you go for classes? I thought Ashfaq you were with us. That's good. Okay, brilliant. Ashfaq, first time, right? Okay. Yeah, brilliant. Okay, we're going to start off with the question. Let's directly start off with the question and then let's see where we are. In the meantime, what I will be also doing is I'm going to share last 10 years of past papers with you with answers. Okay, I'm going to share with you last 10 years past papers with answers. Please remind me in the group. I'll share it with you. I want you to go and watch them all. Okay. When I say watch them, this is read them. Just read the question, read the answers. It's just for your knowledge purposes. The questions and because in audit there's nothing to memorize, there's nothing to practice. It's about knowing how to answer. Guys, let me also tell you, Kaplan answers, right? When you go and do a question and then you go back to Kaplan, Kaplan's answers are crazy. Okay, Kaplan's answers are crazy. You can't even think about writing answers like that. Let me tell you, September batch, we had the world prize winner. We never tried to write like Kaplan answers. Mariam or me, when I trained her, we never wrote like Kaplan answers. All what we did was we took a point, explained a point. So Kaplan answers are only for reference purposes. So if you think, no, I have to write like Kaplan, guys, even I can't write like Kaplan. Even Mariam, who's a world prize winner, even she can't write like Kaplan. That doesn't happen. Okay, so please don't try to write like Kaplan. Maybe ACC examiners don't, but it's the point that matters in the exam. I'm gonna bring Mariam to you very soon, a world prize winner, to tell you how she approached audit exams. That is something that you really needed. She's gonna do a session with you entirely to tell you, okay, this is the do's and don'ts to be another prize winner. So I'm gonna bring her to you before the exams so that you can get an understanding with her also, right? Obviously, a world prize winner, she'll be able to tell you exactly what to focus and how to take things forward. Don't worry, you don't have to pay anything. It's a matter of you just attending that session. Okay, anyway, coming back. let me put up the question that I have in my mind. I think Salt and Partners AA ACCA. Okay, there you go. It's 2013 paper. In 2013, I did Minty Cola with you, right? I did Minty Cola with you. In Minty Cola, I did part A and part B already done. Part C also done. Part D substantive procedures I have to do. I'm trying to do substantive procedures today and on Saturday both. Okay, fine. Here, there you go. Let me put this across on my. Oh, do I have it in explain already? Did I already explain you? Didn't I? F8. There you go. I think I've got it with me already. This is question. This was a rhino. Okay, well, this was another question I did it with. Did it? Okay, there you go. There you go. Salt and Partners. Okay. Right. Before coming to part A and part B, let's jump to part C. Part C says identify and explain 5 ethical risks which arise from the above actions of salt and pepper. And for each ethical risk, explain the steps which salt and pepper should adopt to reduce the risk arising. Two things. Identify and explain 5 ethical risks. You're going to identify and explain. You're going to identify 2 things. Okay, in the exam, you're going to identify and explain. So you're going to pick from the question and you're going to explain why this is a problem. Pick it from the question, you're going to pick, identify, you're going to say why this is a problem. 5 ethical risks, you're going to pick only 5. If your examiner wants 5, please don't give 6. Your examiner is not going to take up 6. He will cut off the last one, which arise from the above actions of salt and pepper. And for each ethical risk, explain the steps which salt and pepper should adopt to reduce the risk arising. Okay. Do you want me to write this, type this and show you, or do you want me to explain you like how I did in the previous question? Can you share the PDF in the group? I'll share the PDF, don't worry. I know the business is not that great. Even I was struggling to log in. Do you want me to type the answers? Explain is fine, everybody? Can I explain? Can I simply explain, everyone? Okay. Before I start, I'm giving you about 5 minutes to quickly go through the question. Quickly go through the question, pick up the points, and we will work this out together. Okay, let's see. Salt and Pepper is a firm of chartered certified accountants which has seen its revenue decline steadily over the past few years. Okay, revenue is declining. That's a point to note. Revenue is coming down. The firm is looking to increase its revenue and client base and so has developed a new advertising strategy where it has guaranteed that its audits will minimize disruptions to companies as they will not last longer than 2 weeks. In addition, Salt and Pepper has offered all new audit clients a free accounts preparation service for the first year of the engagement, as it is believed that the time spent on the audit will be reduced if the firm has produced the financial statements. Okay, brilliant. Okay, there's I've got 2 from you. Let's see. Thank you. So I'm coming back. We know the revenue is coming down and they're struggling, the company is struggling. But here the problem I see is they've developed a new advertising strategy. Well, what is this advertising strategy? The new advertising strategy says that the audit will minimize disruption. We will not we will not take will not bother you. Who the auditors are saying, the audit firm is saying, we will not bother you. Who? To the client. To the clients, they are saying, we are not going to annoy you. We are not going to disturb you. We come, we take our small information what we have to do with minimum disruption, we are going to do the audit. They are confirming because of this, the audit will not last more than 2 weeks. Audit will not last not anything more than 2 weeks. Well, think about it like this, guys. What you are trying to do is, you're coming to PPIM, you're an auditor, you're coming to PPIM, you say, hey, look, I'll finish your audit within 2 weeks. We will not annoy you, we will not bother you. It looks like, guys, even if there are complicated transactions, we will not pesticide you. We'll just finish off quickly, just so that, things are easy for you. We'll make things easy. And just imagine, they do it for all their clients. They're going to do it to Navaloka constructions, they do it to Navaloka hospitals, they do it to Durden's hospitals, they do it to maybe Haley's. So in other words, what they are trying to do is, the detection risk is very high. As auditors, you are not going to do a good quality job. If you are not going to do a good quality job, what will be the result? Your audit risk is very high. So there you go. First problem, minimum disruption. Each and every audit will require different time frame depending on the workload. It depends on the workload. Therefore, if you assure that within 2 weeks you're going to complete the job, your audit quality of job is compromised. So, quality of audit is compromised. Okay, Terza, give me a response to this. Give me a response to this. Give me a response to this, guys. Everybody. I want you to give me a response to the advertisement. Give me a response to this. Talk to me about a response. What are you going to do here? What are you going to do here? Stop the advertisement. Brilliant. Number one, stop advertisement. Well done, Terza. Number two, inform all existing clients that audit is based on the volume of work involved. Audit is based on volume of work involved, not based on 2 weeks. Our audit will not just be done within 2 weeks. It will be based on the volume of work that we are going to do. So, inform existing clients on how audit will be conducted. Guys, you need to understand, right? Now, this particular thing is there, right? This particular thing is there, right? This, you pick it from the scenario. This comes from you. You develop it. Are we clear? Are we clear? Everyone, yes or no? Everybody, you got it? Everybody, you got it? Okay. Second problem. Let's go quicker. Second problem. What's the second problem? What's the second issue? What is the second issue? In addition, Salt and Pepper has offered all new audit clients a free accounts preparation service for the first year. What is the problem there? What is the problem there? What is the problem here? What is the problem here? What's the issue? Accounts prepared by the auditors. You are going to prepare accounts. Great. Well done, Saifullah. There you go. A self review threat occurs. Why? Because you may end up reviewing your own, auditing your own financial statements prepared. So can result in auditing financial statements prepared by S&P. So they will not be able to identify their shortcomings. So you should tell the examiner, okay, you tell the examiner, because of that, as a result, you will not be able to identify your own shortcomings. So you have to tell that to the examiner. You get my point? Okay, super. Now for this, give me a response. What could be a response? What could be a good response? Is this allowed? Is this allowed? Is this allowed or not allowed, Abdullah? Is this allowed or not allowed? Well, we should not provide the services, says Abdullah. The auditors should ensure that they have available resources such as manpower. If not, they should stop that service. Use another team to do the audit. Priyanka, well done. Terza, well done. Nabil, yes, it has to be two different teams. Guys, this is permitted. You can do this, but two different independent teams. One team to prepare the financial statements and another team to do the audit. You got to have two different teams. Are we clear? Are we clear? Now guys, these are points, okay? You have to develop your answers based on these points, okay? Okay. The firm is seeking to reduce audit costs and has therefore decided not to update the engagement letter. Engagement letter, okay. Guys, since it has come up, I'm going to quickly let you know what an engagement letter is. An engagement letter is a contract letter. An engagement letter is a contract letter between the audit firm, and the client. The audit firm will send the engagement letter saying, okay, these are the services that we are going to provide. Please sign and give it to us. So the audit firm gets into a legal contract with whom? With the client. And when the legal contract comes in, that comes through an engagement letter. In the engagement letter, what will you have? You will have the services that you provide, what is management's responsibility, what is auditor's responsibility, what is the regulatory framework that you are adapting to. You understand? What does the management want to do? The fees will be there. What are you going to audit will be there. The title will be there. The subject matter will be there. So all this is a part of the engagement letter. Are we clear? Okay. The firm is seeking to reduce audit costs and therefore has decided not to update the engagement letter of existing clients. Okay. Now guys, the International Audit and Assurance Standards Board, the IAASB, for financial reporting, IASB, for audit, IAASB. IAASB requires engagement letters to be updated every year. So you're going to update and send it every year. So that is a problem. So you say, okay, because the engagement letter, if it's not updated, you will not know what exactly you're doing. Your terms, your conditions, what have changed, all those are not reflected. So basically an engagement letter is very, very important. It has to be updated. Let's go further. As these do not tend to change much on a yearly basis. That's okay, although it doesn't, but you have to update it. One of Salt and Pepper's existing clients has proposed that this year's audit fee should be based on a percentage of their final pre-tax profit. The partners are excited about this option as they believe this will increase the overall audit fee. Now, how do you respond to this? How do you respond to this? Now, here, this is going to be what? This is going to be contingent fee, correct? This is going to be, that's right, guys, contingent fee. Contingent fee, is it allowed? Can you allow it? Yes or no? Are contingent fees allowed? Yes or no? Can you allow contingent fee? Yes or no? No, contingent fees are prohibited. So first you have to say Tell the examiner, look, a client has proposed a contingent fee based on pre-tax profit, but however, this gives rise to a self-interested. Because of that, auditors may be motivated to show higher profits because their audit fee will also go up. Therefore, this is prohibited. Therefore, this is prohibited. Okay, how are you going to respond? How are you going to respond? You're going to go and tell the client, hey, client, look, contingent fee is not permitted. If I try to work with you on contingent fee, my audit quality is not be fine. It's not permitted. It's illegal. It doesn't happen. So because of that, please try to understand that audit fee should be based on what the workload that I do to you, the audit expert that I bring in, based on complexity, based on time taken, Nabil, well done, based on the audit partners who are involved, the seniors, the managers, the experts who are involved. So because of all these reasons, contingent fee is prohibited. Therefore, we advise the client, this is not allowed, so I'm not going to take that. However, if the client says no, 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 I want to work on a contingent fee arrangement with you, you tell them, hey, look, I'm politely declining the offer. Politely declining. Meaning I'm politely not going to audit your company. You get my point? The first a discussion has to happen. And then what will happen is we are going to politely decline. Clear? So I got my first, second, third, fourth point. Okay, let's go further. Salt and Pepper has recently obtained a new audit client, Cinnamon Brothers, whose year end is 31st December. Cinnamon requires their audit to be completed by the end of February. However, this is a very busy time for Salt and Pepper, and so it is intended to use more junior staff as they are available. Additionally, in order to save time and cost, Salt and Pepper have not contacted Cinnamon's previous auditors. Any problems there? Any issues there? Any issues there? Salt and Pepper has recently obtained a new audit client, Cinnamon Brothers, whose year end is 31st December. Cinnamon requires the audit to be completed by the end of February. However, it's a busy time for Salt and Pepper, so it is intended to use more junior staff as they are available. Okay, now you're talking about a new client, right? You're talking about a new client, right? You do not know the opening figures. You do not know what the previous auditors did, if the job was correct or not. Correct? You understand my point? So, what will happen if you don't allocate senior members, senior partners? The junior staffs are going to mess up. The junior staffs are going to mess up. If the junior staff mess up, that means the quality of the job will be compromised. As a result, the audit risk is very, very, very high. So what would be your response? Your ideal response will be either to talk to the client, you talk to Cinnamon and tell them, hey, look, it doesn't look like we are able to complete the audit by end of February. Probably we need more time. Or probably have more staffs. Need more time or have more staffs. You allocate more senior staff. Additionally, in order to save time and cost, Salt and Pepper have not contacted Cinnamon's previous auditors. Well, it is very important for you to contact the previous auditors. Why is it important to contact the previous auditors? To understand if there were anything illegal, unethical with the client. So you got to make sure that you somehow get connected to the previous auditors. And also you need to understand why there was a change in the auditors. So immediately get connected to the outgoing auditors and understand what actually happened and then work around it. Are we clear? Are we clear, everyone? Yes or no? Guys, everyone, are we clear? Guys, everyone, are we clear? Yes or no? Clear? Okay, super. Guys, I will also, what I will do is I will write my answers, type my answers and send it to you so that you can review it. Yes, Kaplan is there. I'm not saying no, examiner's answers are there, but they're too detailed. You can have and take ideas, but in the exam as to how you want to write, I will type and send you the answers. I'll try to send it by tonight. Okay? Understood? Okay, super. Moving on to our next area, right? Our next area will be substantive testing. Okay, so substantive testing. Substantive testing. Guys, minimum for 20 marks, you're going to get substantive testing. Now, let's try to understand what is substantive testing, right? Now, guys, you have your audit report. Guys, this diagram is very important. What I'm gonna on screen is very important. Okay. In fact, I'm gonna summarize your entire audit syllabus in one frame, in one picture. Your audit report. Now, that is the ultimate report you're going to give to the shareholders. Shareholders are going to take the report. They're gonna read the report. They're gonna say, hey, look, okay, is there in the audit report we are gonna say there is a material misstatement or no, there is no material misstatement. So audit report is about material misstatement. Now, for me to say that there is a problem with the audit report, sorry, there is a problem with the financial statements. For me to go to the shareholders, tell them there is a problem with the financial statements, I got to make sure that I have evidence. So audit report is supported with audit evidence. Okay, and when you're talking about audit evidence has to be of two things. Audit evidence has to be reliable, has to be relevant. Okay, in other words, audit evidence has to be, number one, sufficient, number two, appropriate. Sufficient means the quantity, appropriateness means the quality. Sufficient means the quantity of evidence that you have. Appropriateness means the quality of evidence that you have, how much you have and how good it is. So appropriateness technically is your relevance and reliability. Reliability means from where the audit evidence is coming from. Your reliability of audit evidence is very high when it is obviously externally generated. External audit evidence is very reliable than internal audit evidence. Correct. Now, when I'm talking about external audit evidence, what you get from independent sources, what you get from independent sources, what you get from the bank, where you get a bank statement, it's going to be very reliable. You get from an expert trying to do a work in progress, that's very reliable. You get expert valuation, it's reliable. So audit evidence is reliable when it is external. External is highly reliable, and it is relevant when it is connected to you. So when as an auditor, you need to make sure that when you are getting the evidence, it is relevant and reliable. In other words, sufficient and appropriate evidence. Sufficient is the quantity of evidence. Appropriateness is the quality of evidence. Okay. Now, for you to get this audit evidence, guys, for you to get this audit evidence, there will be primarily two testing that you will undertake. Number one, an internal control testing. Number two, a substantive testing. Are we clear? Guys, internal control testing means I go as an auditor, I need evidence. No, I go and check the controls of the company. I'm trying to understand if the controls are strong or not. For example, let's say, for example, let's say you have a sales system. This sales system is generating your sales in the financial statements. Let's say your sales in the financial statements is 1 million. So the system is generating the sales, correct? The system is generating the sales of 1 million, correct? So you're going to enter. As an auditor, maybe the sales system would have generated about 500 invoices, 600 invoices to get to that 1 million. Okay. Now you have two things. Listen to me. Okay. I want your focus. Now you have two things. Let's say your sales system is structured in a way. Your sales system is structured in a way where the credit limit of customer A is 100,000. The credit limit of customer A is 100,000. So you have about 500 invoices. Let's say you've got customer A also in there. Okay. Your system is structured in a way where your customer A's credit limit is 100,000. Okay. Now what is happening? You are the auditor. You want to check if this is correct or not, because this 100,000 is ultimately included as a part of 1 million. No. You have option number one. You take the system, type in 120,000. Credit limit is 100,000. You type in 120,000. A good system should accept this transaction or reject this transaction. A good system should accept this transaction or reject this transaction. Well done, Nabil. Reject or flag. Inchifa, reject. Are you sure? Everybody, a good system should accept or reject the transaction. Mino, Terza, Priyanka, Saifullah, Abdullah. A good system, when your credit limit is 100,000, when you enter 120,000, a good system should reject. A bad system will accept. A good system will reject, a bad system will accept. Now hold on. Now look here. A good system will reject, a bad system will accept. As an auditor, I have two choices. I go check this system. I go and check this system. When I go and check the system, I'm trying to test the controls put up by the management. I call it an internal control testing. But let's say I test the system, I'm not happy with the system. I go back to the transactions individually, the invoices, the support system, to the customers, in terms of trying to understand the values, to understand if the customers really exist, is it true or not. If I want to do that, that is known as a substantive testing. A substantive testing is a substantial amount of testing. A substantive testing is a substantial amount of testing. Testing the substance of each and every transaction. And internal control testing is testing the controls of a company, systems of a company. Okay, Ziyan, what are the systems that are relevant for my exams? A sales system is relevant. A purchase system is relevant. Inventory system is relevant. Non-current asset system is relevant. Liabilities relevant. Trade payables, trade receivables. On the other hand, sales, purchasers system, inventory, inventory system, non-current asset system. What else is relevant? Trade receivables. Okay, there you go. I think that's it. Oh, cash system. Thanks. A cash system, petty cash is also relevant. Payroll. Thank you. I keep forgetting. A payroll system is also relevant. I hope I've not missed anything. These systems are relevant in the exam. When you're talking about substantive testing, on the other hand, like I told you, substantive testing is a substantial amount of testing. In substantive testing, what you're going to do is you are going to look for two things. What are you doing and why are you doing? What are you doing and why are you doing? I'm going to explain you in depth, don't worry. Okay, let me finish this diagram so you understand the entire audit this thing, right? Give me a second. So basically, in terms of substantive testing, like I told you, you're going to do two things. What are you going to? Yeah, you want a prayer break. Okay, quickly bring up. It's okay. So you're going to do two things. What are you doing and why are you doing? Okay, we'll be looking into that, right? And we are going to look at the assertions. I'll come there, right? Now coming back. Before coming back here to substantive procedures, as an auditor, you will want to verify audit risks. We've already studied audit risks, right? We looked into audit risk and we know that is a major part of your syllabus. We looked into it, correct? So you understand, I'm gonna show you a diagram, okay? From audit report to audit evidence. Before audit evidence, you're gonna do two testing. Before that, you're gonna check if the client in terms of audit risks. But before that, you need to plan the audit. So you have audit planning. So audit planning, we know resource allocation, materiality, strategy, timing, direction. Those are audit planning, which we already looked at, right? I took you through that earlier. But before audit planning, you have client acceptance. Under client acceptance, you have ethics, safeguards, issues that we saw already. So obviously a client has to accept for you to plan. When you plan, you get into the audit risk. When you do the audit risk, you will see if you're going to do an internal control testing or substantive testing. Let's say you go and test the controls of the company. You're not very happy. You move to the substantive testing. Substantive testing is never eliminated, but it's not 100% internal control testing. But when you do both, when this test come in, you gather evidence. With the audit evidence, you're going to give your audit report. This is your entire audit syllabus in a glance. But of course, here what is missing is internal audit, and corporate governance. Internal audit and corporate governance is missing, and also assurance engagement. Assurance engagement. All what I would recommend you to focus for your examination is primarily, like I told you, this, these particular areas are very important. Also, this. Are you clear? Internal audit covers in internal control testing, right? Or it's a separate area. Internal audit is a separate area. Internal audit is a separate area. Internal controls are systems based auditing. That is separate. This is separate, my dear. Are we clear? Can I go in depth in terms of substantive testing? Can we go in depth? Have a quick look at it. Have a quick look at it. Everybody understood? Actually speaking, this is your audit syllabus at a glance. Fine. Guys, let's come back. Let's come back to substantive testing. Okay, you check the systems of the company, the controls of the company. You're not very happy with the controls and systems. You're not very happy. So you're going to undertake a substantive testing, a substantial level of testing, in detailed testing. When it comes to a substantive testing, your examiner expects you to answer two questions. Question number one: what are you doing? Question number two: why are you doing? What are you doing? Why are you doing? Okay, Ziyan, I don't understand what I'm trying to say. Okay, hold on. Your examiner will say, for example, your examiner will say, PPIM has purchased a new machinery. So PPIM has purchased a new machinery, and this new machinery is there in the financial statements under non-current assets. As an auditor, you have to confirm if this is correct or not. In other words, what you have to do is you have to use certain verbs. In the exam, you're going to do certain verbs. Use certain verbs. Verbs are what? Verbs are actions. Verbs are actions. Now I'm talking, it's a verb, action. I'm writing, it's an action. So in other words, what are you doing is always an action in the exam. You can, number one, review a bank statement. You can, number two, observe a process. You can, number three, recalculate depreciation. You can, number four, inspect a document. You can, number five, do an inquiry. You do an inquiry. Inquiry can be, as an auditor, an inquiry can be, I come to you, you are the manager, I ask you, do you always authorize OT overtime? Do you authorize OT overtime? You can either say yes or no. It's an inquiry. If you say yes, I can say, how do you authorize? You will say, look, I sign OT. Then I tell them, okay, fine. If you sign your overtime before approving, can I have a look? I will inspect. It can be inquiry, inspect, recalculate, observe, review. Number six, reperform, reperformance. Okay. Now, guys, these are verbs. These are things that you're going to do. You're going to review something, you're going to observe something, recalculate, inspect, inquire, reperform. Are we clear? Are we clear? Now, you have to tell your examiner what you are going to do and why you're going to do. Okay, what is the purpose of you doing all this? To achieve ACCA cover. I want you to keep this in mind. ACCA cover. A stands for accuracy. C stands for completeness. Cutoff, allocation, uh, classification, occurrence, valuation, existence, rights, and obligations. As an auditor, what are you going to do? You're going to review, observe, recalculate, inspect, inquire, perform. Why are you doing? You need to check if it is accurate. You need to check if it is complete. You need to check the cutoff. What do I mean by cutoff? Is, let's say your year end is 31st December. You can't take 1st of January. After that year, revenue into 31st December. Your cutoff period is 31st December. You understand? Allocation means correctly allocated to the period. Classification means within expenses if it's classified properly. Occurrence means did revenue actually occur or was it fabricated? Valuation means valuation of bad debts, valuation of inventory, valuation of provision, valuation of non-current assets. Existence means is it really existing physically? Can you see? Rights means yes, you see, but is it yours? In the exam, you're going to do two things to get your substantive procedure. What are you doing? Why are you doing? Now your examiner says PPIM has purchased a new machinery. For this, they will want you to give a substantive procedure. If you are going to give a substantive procedure here to confirm if the machinery is actually purchased and it is there, what would be your audit procedure? We call this procedure. What you're going to do is procedure. Why are you doing is your assertion. How will you confirm that this machinery is there or not? What is the suitable verb that you're going to look for? You tell me. You tell me. You tell me the procedure first. Okay. Now you're going to tell the examiner what you are going to do. Okay. Let's go to the answers. Observe. Ashfaq, well done. Okay. Now this machinery is there, right? You're going to confirm if that machinery is there. Review. Do you review a machinery? Do you observe a machinery? You observe a process. A process is happening, you observe. You observe an inventory counting process. You don't observe a machinery. The machinery is standing still. An inventory counting process is, something is happening. Recalculate is out. Inspect. Inspect means what? You go and check. Inspect. Some of you got the word right. Inspect. What are you going to do? You're going to inspect. Why are you going to do? Why? What is the reason? Abdullah, good. Good. Good answer. Guys, now tell me the why. You've told me the what. Give me the why now. You give me the what. Now you have to tell me why. You're gonna tell me why. Well done, Saifullah. No, Abdullah. No, Nabil. No, Terza. No, Nabil. You go and inspect. You go and inspect. Why do you inspect? I want you to give me the answer from here. Do you inspect the asset for accuracy? You probably inspect the invoice. There you go, Nabil. Get that right. There you go. Do you inspect the asset for completeness? Priyanka, well done. Guys, tell me, do you inspect the assets for cutoff? Why, guys? You inspect the assets to confirm its existence. You inspect the assets to confirm existence. So in the exam, you will give the examiner. I will physically inspect the machinery to confirm existence. What are you doing? You're inspecting. Why are you doing? Your existence. 1 mark in the exam. That is a procedure, a substantive procedure. Is that difficult, everyone? Yes or no? Is that difficult? Yes or no? Be honest. Was that difficult? Was that difficult? Yes or no? Saifullah says no. Nabil says no. Others? Was that difficult? Mino, Inshifa, Priyanka? A little confusing, but not difficult. Terza says okay. Guys, it is difficult. It is difficult. It's tough. It is tested for 20 to 25 marks. Trust me, students fail in this area. You need a lot of practice. Okay, let's try. Let's try. Okay. Describe substantive procedures the audit team should perform to obtain sufficient and appropriate audit evidence in relation to the following three matters. The treatment of 5 million expenditure incurred on improving the factory production process. Your examiner wants substantive procedure for this 5 million expenditure incurred on improving the factory production process. The release of 1.5 allowance for receivables and the damaged inventory. In total, this is coming for 9 months. So, three procedures, three procedures, three procedures. Well, I'm sure you've forgotten the question. We're going to go to this particular area and see how to work that around. The treatment of 5 million expenditure incurred on improving the factory production process. Okay, let's come to the top. Where is the factory production process? Right here. There you go. This one. Minty's trading results have been strong this year, and the company is forecasting revenue of 85 million, which is an increase from the previous year. The company has invested significantly in the cola and fizzy drinks production process at the factory. This resulted in expenditure of 5 million on updating, repairing, and replacing a significant amount of the machinery used in the production process. Sir, but is it enough? Only this much of words for 1 mark? Yeah. You're going to tell the examiner what you're going to do, why you're going to do. Saifullah, don't worry too much. Keep it very simple. But if you think, what easy, not difficult. Okay, now try to get these procedures for me. Here your examiner says, give procedures for the treatment of 5 million expenditure incurred on improving the factory production process. Now, you are spending 5 million on updating, repairing, and replacing. So 5 million on updating, repairing, and replacing. Okay, you have to give three procedures. You have to give three procedures which says what are you going to do to confirm this 5 million is correct or not, and why are you going to do? Practically tell me. Tell me. Come on. Review the cash book for expenditures made to see whether the 5 million has paid off. Review the cash book or bank statement to see, rather than to seek to confirm, Okay, well done. Abdullah, you've got a good one. Obtain a breakup of the expenses and trace the expenses that are relevant to capital nature to the invoice and work performed, such as repairing expenses cannot be capitalized. Ashfaq, inspect existence, review for accuracy, recalculation for valuation. Okay, not bad. Let's dive in deep. Okay. Right. Now this 5 million will include, guys, revenue, expenditure and capital expenditure. Correct? Meaning, what is revenue expenditure? Day-to-day expenses like, repairs, probably updating. Capital expenditure is replacement. Correct? So let's say 2 million was capital, 3 million was revenue expenditure. You understand the point? So if it's capital expenditure, where will capital expenditure be reflected? Where will capital expenditure be reflected? Capital expenditure will be reflected in non-current. Yeah, PPE, but before that you will have it on the non-current assets now. You understand? So review non-current assets register. Review non-current asset register to confirm only capital expenditures are included. But what does it mean? It means that your non-current asset register is complete, are included to confirm completeness. What are you doing? Reviewing. Why are you doing? Completeness. 1 mark. Are we clear? Are we clear? Number 1. Number 2. You have treated some assets as capital expenditure. As at the year end, what will you do? As at the year end, what will you do? As at the year end, what will you do? Well done, Terza. Recalculate depreciation for a sample of assets to confirm. What does it confirm? Depreciation, what does it confirm? For depreciation, what does it confirm? Well done. Accuracy. It confirms accuracy. Depreciation accuracy, Saifullah, when you go and check the non-current assets valuation after deducting it. Are we clear? Now that's where you go wrong. Another point, probably. Guys, you're spending 5 million. 5 million is a small amount or a big amount? 5 million is a small amount or a big amount? Probably it's big, right? If you're going to spend 5 million, obviously it would have been come from the approval of board of directors. If it's board of directors, when they approve something, where is it reflected? Where is it reflected? Well done, Saifullah. Well done, Terza. Review board minutes. There you go. Review board minutes to confirm the approval of board of directors in relation to 5 million expenditure. You review the board minutes. Go through the board minutes. That's your third mark. You understand? Number 4, review repairs and maintenance account. Maintenance account to confirm only repair expenses are included, to confirm completeness. Are we clear? Are we clear? Yes or no? Yes or no? Looks easy, but it is not easy. Okay. Now, second part of it says the release of the 1.5 million allowance for receivables. The release of the 1.5 million allowance for receivables. Okay. Now we're looking at this. Okay. Now try to think of it. I'm going to give you about 2 to 3 minutes. Think of it and quickly let me know. Okay, this is where it is. 1.5 million is here. Okay, think about substantive procedures for it. Here what is happening? As a result of the increase in revenue, Minty has recently recruited a new credit controller to chase outstanding receivables. The finance sector thinks it is not necessary to continue to maintain an allowance for receivables and so has released the opening allowance of 1.5 million. So 1.5 million allowance, 1.5 million has been released allowance. Now you got to tell the examiner if this is correct, if this is prudent or not. What are you going to do? This 1.5 million allowance is not there anymore now. Meaning your trade receivables have gone up or come down. Your trade receivables have gone up or come down. Gone up, correct. Because it was set off earlier, now it's not set off, correct. What can I think of, Saifullah? Let's say 1.5 million. 1.5 million is made up of about 4 or 5 customers. Okay, Abdullah, review subsequent cash payments relevant to the allowance. Brilliant. Okay, you will see after date cash receipts from the customers. If you are receiving any slow moving, if there are any slow moving or old receivables, subsequent cash receipts. Superb. Subsequent cash receipts. But how are you going to put it to words? Review the bank statement. Review the bank statement. Don't just say review the cash receipts. Review the bank statement to confirm any cash receipts relevant to the allowance. You understand? Are we clear? Please talk to the examiner, connect it to the document. What are the documents that you can connect to? You can connect to board minutes. You can connect it to FA register. You can connect it to bank statements, which is very important. You can connect it to financial statements extracts. You can connect to general ledgers. You can connect to trial balance. You can connect it to maybe documents, probably documents such as what trade receivable circularization, expert valuation reports. You can connect to shareholder documents, maybe annual returns, you can connect it to shareholder registry. All those documents you have to connect. Are we clear? Subsequent cash flow receivables, brilliant. You can check for any uh, you can check if there are any aged receivables which are slow moving, and see if there is a problem. If you're not going to review aged trade receivable balance to identify slow moving and old balances, well done in Shifa, I'm good with that. Obtain confirmation from customers to confirm existence of the balance. Looks fine, no problem, looks okay with me, I'm fine with that, I'm happy with that. You can also like how Abdullah says, obtain confirmation correspondence from customers to see if they are going to pay or not. If they're not going to pay, remove it, right? Looks fine. And finally, the damaged inventory. The damaged inventory is somewhere here. Adjustments to damaged inventory of 1 million, there will be no adjustments. That's what they say. They say the finance director stated that there was a problem in November in the mixing of raw materials within the production process, which resulted in a large batch of cola products tasting different. A number of these products were sold, however, due to complaints by customers about the flavor, no further sales of these have been made. No adjustment has been made to the valuation of the damaged inventory, which will still be held at the cost of 1 million. What are you going to do? 1 million. 1 million. They're going to hold on to this 1 million. They're not going to make any changes there. Inventory. What are you going to do? I'll give you an easy one, right? You've got 1 million worth of cola products, they say, right? You take all the inventory in terms of cola products. You take everything, okay? Maybe 100 ml bottles, 200 ml bottles, 400 ml bottles. Take everything, put it on Excel, count entirely, count, cast. We don't say count here, we say cast. Why do you count? Cast to confirm the accuracy. So number one, cast to confirm accuracy. Cast means count entirely to confirm. Cast is also a verb. You're counting. Number two, what are you going to do? What are you going to do? Agree the cost of damaged goods. Cost of damaged goods to supporting documents to confirm accuracy. In Shifa, can you elaborate that further? Recalculate to check if the law of NRV or cost of, okay, recalculate, that's a good answer for me. Recalculate to confirm cost of NRV value, to confirm what? Valuation of inventory, to confirm valuation of inventory. Inquire finance director the rationale and approval for not goods being cost to NRV. Inquire or even discuss is fine. You can use the word discuss. Discuss with the finance director the rationale behind why inventory is still being held at cost and not NRV. Further, I would say check post year end sales of this damaged inventory to understand if they are being sold at the proper cost or if the NRV is lower in terms of valuation. It will help you. You can also speak to the director to understand how they are going to dispose this damaged inventory, to understand how they are going to remove it from the warehouse. That will also talk about inventory valuation. Well, what do you think? What do you think? Looks okay? Looks okay? Trace the annual count document, the inventory sheet, inventory count sheet you're talking, and the auditor's inventory count sheet for to understand, okay, what are damaged and obsolete inventory, are they kept separately. You can physically go and inspect the damaged inventory. That's another point. Physically go and inspect the damaged inventory to confirm they are existing. Guys, what do you think? What are your thoughts about this? Are you okay? What do you think about this? Are you okay? Okay, can manage? I think so. You think you can manage, but guys, you understand we have restricted time, and what I'm trying to do is I'm trying to do more questions. Uh, Let me help you with something. Okay, I'm gonna share some tunes of mine, which can be really helpful for you in terms of your exams. Okay, salt and peppers answers I've just shared with you. Please, that is my answer. When you compare that with Kaplan, it's not going to be the same, but my points will be covered. And I'm going to share some guidance in terms of substantive procedures, which I would recommend you to go and have a look at. Okay, let me share what I have with me. Before next class, I want you to go through this and come back so that while answering substantive procedures, it's going to be really easy for you. Okay. Okay, that's for property, plant and equipment. Guys, under normal class scenario, I would have taken you through that entirely, but I'm so sorry, our time is limited, so I can't take you through it entirely. But please go through it. That's going to be really helpful before the exams. I've shared audit of property, plant and equipment. I've shared audit of inventory. Guys, when are we meeting again? Can we try to meet tomorrow? Can we try to meet tomorrow? Tomorrow is a holiday. Can we try and meet tomorrow for another session? Probably this time 6 to 8. I can do some, probably I can do some past papers with you. Okay, I'm sharing cash and bank. Fixed cost, that's not what is relevant for you. That is fishery distance. Okay, I'm sharing some important substantive procedures which can be. Okay, Nabil says busy. Nabil, this session is entirely free, and we are trying to give you some sort of a benefit. I am actually packed. There's at least about 230 students of mine sitting for exams in December. And I know you're busy. There's about 230 students, and still, I'm trying to give that time because you guys are very interested in the session. So, yeah, let me see if you can do a session tomorrow, let me know, because tomorrow is a Poya day, I believe. So, I might have some time in the evening. If that's the case, we can do some substantive procedures because it's very important. Or did I share in the correct group? No, I'm sorry, I haven't shared in the correct group. Okay, I'm sure now you would have got it. Okay, I have some more past papers. I'm trying to share that as well with you. And then what did you want from me? What else do you require from my end? Anything else that you require from my end? Okay, I've got a confirmation. I've got a message from my team. They want your name probably to give you the access to this thing, to give you access to the revision game plan. They want your name and they want your ACCA ID with your past results. Can you drop a message on the this thing? This is, I want details of students who are not PPIM students. If you are a PPIM student, you will get it anyway. By default, you are getting it. I'm trying to speak to the management to give you access to the revision game plan. Revision game plan is recorded classes on the real ACC. Okay, let me show you how it is, right? Revision game plan, PPIM. Okay, this is what this is about.
The revision game plan now offers you the perfect opportunity to build your confidence.
Is that okay? I'll just share it in the group. But guys, what happens is in the real ACCA this thing, we've done videos. So PPIM, where's PPIM? So just maybe drop a message to me. They want your name, user ID, and your past results. Not here, please. Just drop it in the group for me, please. Okay, if you think it's personal, okay, fine. Let me take pictures and post it. That's okay. Okay, yeah. I mean, it could be personal, right? Fine. Post it here. I'll take a picture. Your name, your ACCA UK registration ID, and your previous skills level scores for them to give you access. They'll get in touch with you. So I'm trying because this is normally sold at 5,000, 6,000. I'm trying to see if I can help you. Ashfaq, thank you. I got it. I think Ichifa, you will get it. You are our student, I know. Mino, I'm not sure if you're our student. Who else? Nabil, I'm sure. Yeah, Abdullah. Yeah, okay, I got it. No problem. Minori, this is the first time you're sitting for an exam, is it? Okay. Priyanka, you got it, meaning have you got the access? Are you a BPM student? Oh, okay. You followed classes like that. Then what happened? Terza, really? You have the account? Yes, Terza. Better. That's what they want. Saifullah, yours as well, please. And guys, I will be sharing some past papers also, like I told you. Please make sure you go through. By tomorrow, I want you to go through all the materials that I've shared so that you can be prepared for the next substantive procedure questions that we are doing. Okay, Saifullah, have got it. Yes, Priyanka, so far we are having classes tomorrow. I want to do it the same time like how I did it today. Most likely we are meeting tomorrow. Teresa, I've not got your results. If you can send me the results, I have another class, so I'm gonna go now. If you can just message me, I'll get that sorted. You know my number, right? So fine, guys. So I'll talk to you soon. Maybe tomorrow. We'll keep doing. We'll keep studying harder, better. And until tomorrow, take care of yourself, and we'll try to meet tomorrow at about 4:30. I'll let you know the time in the group. Bye bye, guys. I have another session now, so I'm gonna get going. Take care. Bye bye. Have fun.